Hi everyone, welcome to EagleEye Intelligence, your edge in high-frequency markets. In today's data-saturated world, reacting fast is everything. EagleEye gives you real-time access to latest market shift, anomalies, and sentiment signals so that you're always one step ahead. We filter out the noise, cutting through the headlines, market sentiments, and 13F filings, and only deliver what matters to a portfolio. Think of it as clarity on demand. With rock-solid data integration, exportable insights for your team, and a dashboard that visualizes market colors intuitively, EagleEye helps you trade smarter and act faster. Firstly, I'll be presenting a simple login page that our team built. The goal of this was to create a user-friendly authentication system that allows users to either log in if they have already created an account or to sign up if they're new. I will demonstrate it now. Okay, now I'll be starting with the login. I'll be entering the email, and then this is the sign up process. So I'll put my name, and then Singapore, and password. Okay. Okay, so now that I've logged in, I'll be presenting on the macro page. So looking at the macro page, this is the overview of the 11 different alternative data that we decided to pick. Okay, so the first one will be the TSA throughput, which actually shows the consumer mobility and discretionary spending. It's a great proxy for confidence and travel activities. We also added different time frames so that we can show people how the current data is relative to the past. This gives them a bigger picture to make their own judgment about the markets. Next off, we have the box office, which also talks about discretionary spending in the United States. Yeah, so this is how it should like. Okay, next one. Broadway revenue and capacity reflects urban foot traffic and high-income leisure trends. This is how you look like. Okay, next off will be the non-farm payroll, which gives us a pulse on the labor market strength. Moving on to US oil production, which signals industrial output and energy demand. Next one will be the total loans and leases by commercial banks, usually offering insights into credit conditions and business sentiments. Next would be the weekly economic index, which gives us a real-time composite of the overall economic activity, almost like the nowcast of the GDP. It's of a higher frequency. Okay, next one would be the US jobless claims, which serves as an early warning sign for labor market stresses. And this is how it look like on a higher time frame. Next up, we'll talk about the ASA staffing, which reflects hiring momentum from ground up, particularly in the temporary and contract jobs. Moving on will be the open table reservations, which tracks real-time consumer dining behaviors, a great gauge for discretionary spending. And then last but not least would be on the sector level business opening, which helps us see which part of the economy are accelerating or stalling out. Okay, now scrolling up. Okay, so this chart that we saw at first would be the overview of the 10 different indicators that we mentioned just now. And let me explain the rationale. So this one would be just a one-stop overview of all the indicators, and the colors actually represent whether it is positive for the economy or negative for the strength of the economy. So the white color would be on more on the average. It is hovering around the average level. Light red would be one standard deviation away, below average. Red would be two standard deviations below the average. And then the converse is the other way is true as well for the green. Light green would be one standard deviation, and the dark green would be two standard deviations higher than the average. Okay. Now moving on to sentiments. Okay, so for sentiments, what we did was that we look at the Google search volumes, and then we pick keywords, and this way we can track like what are people searching online, and what are they keying on Google search. Okay, so we split them into 3 different categories. First on macro stress indicators. Second will be market sentiment and risk aversion. And last but not least will be on the stress household financial strains. Okay, and how we did this is very similar to the previous one, where we look at average and standard deviations. Yeah, so using that, we are able to create the gauge chart where we can have a one-stop overview of whether the economy it's how is it doing. Yeah. And so this you can have a look at this. Okay. Now moving on would be on sentiment data. Okay. So this shows you consumer sentiment, where there is a monthly survey conducted to ask people around to see how they feel about economy. And consumer sentiments has been a leading indicator for a few recessions, not all, but quite a few. And so we decided to add this in, as we thought it would be a good way to let people have a view of it. Yeah. And so this is the consumer sentiment, this is the current economic conditions. So it's a good way to compare. So sometimes consumer sentiments precedes the actual economic conditions. And then this also consumer expectation, which will be the future expectations on the economy. Yeah. This is the consumer sentiment chart, where you can see how it is relative to historic levels. Same thing can be done for the current economic condition. And lastly, the consumer expectation, which is on the market outlook in the future. Okay. Okay, now moving on to markets. Okay, so for markets, right, what we did is we just want to have it's pulling at real time and updates daily. And what happens is that it will always check on what is the S&P's return across different sectors. Okay, so this is your month to date, and this is your year to date. Okay, so as you can see, industrials, infotech has been outperforming for the year, and the lagging ones will be consumer discretionary and healthcare. Okay, now that would be cool, but I think having the MSCI World Index would be also very interesting, as we can use it compare it with the US, and whether it's outperforming the US or is it underperforming the US. As you can see, relatively, I think it's more or less the same as the US compared to the world. And then whereas for the year to date, you can see that the world is actually outperforming the US market. Yeah. Okay, then the next one will be we look at different indices like your MSCI China ETF, your Hang Seng Index, which is the Hong Kong Stock Exchange, and then your Nasdaq, S&P, World Index, MSCI World Index, your Nifty 50, and your FTSE 100. Okay, and that's all for the markets part. And yeah.
Thanks, Enzo. Now I'll be going through the stakeholder page. Hedge funds are among the most strategic institutional investors. By adding their data, this unlocks a window into institutional strategies, fund comparisons, and overlaps, signals that complement congressional and ETF data. We've prepared 7 charts today. The first, on the top left, we have the holdings by sector hierarchy. This interactive hierarchy breaks down each hedge fund's portfolio by sector, industry, and company. It reveals how capital is distributed structurally by offering a top-down view of sector bets and diversification strategies. On the right, we have the cumulative gain-loss funnel, the value changes by company. This funnel chart visualizes the cumulative unrealized gains or losses per company, ranking holdings by the performance impact. It helps identify which positions are driving funds' returns and which are dragging them down. We have the portfolio percentage distribution by sector. This provides a clean sector breakdown, showing the percentage allocation of the total portfolio. Users can quickly assess concentration risk, sectoral biases, and thematic alignment. On the right, we have the company activity rankings. This ranking surfaces the most actively modified positions based on recent increases, trims, or exits. It highlights where funds are showing conviction or reacting to market shifts. And as we scroll down to the bottom, on the left, we have the fund company holdings heat map. This matrix maps hedge funds against company, color-coded by position, size, or changes. It's useful for spotting overlapping holdings, contrarian positions, or identifying companies with widespread hedge fund interests. On the right, we have the top holdings sunburst chart. This focuses on the fund's largest bets. This hierarchy drills down into top holdings and their structural composition. It highlights the fund's core convictions and where the majority of the capital is allocated. And on the bottom right here, the holdings activity calendar is a heat map showing trading or position change intensities over time. It reveals behavioral patterns like quarterly rebalancing, opportunistic entries or synchronize trading events across the different funds.
So with a big project, we had to adopt some SRE practices. So for collaboration, the team uses Git for version control to allow us to log changes and roll back changes during application issues. So Git branching has been especially useful for concurrent development. It allowed us to work on portions of the UI without merge conflicts getting in the way. The team uses GitHub to manage our remote repository. For project management, the team follows the Agile project management methodology, where we form our milestones from user stories in milestone 1. With each sprint, we take the milestones from our product backlog and decompose them into issues during the sprint planning meeting. So for project management, the team uses Excel and GitHub issues to manage task allocation so that both members are clear on the project timeline. Code reviews are conducted regularly during team meetings in Discord before each branch merge to ensure that new code follows coding standards. So in milestone 2, the team connected the remote repository to the Vercel deployment service. With the code base automatically deployed with each push, the team will tighten the code integrity by introducing an automated test suite in milestone 3, thereby completing the CI/CD pipeline. Thanks, guys.